If you want to be a successful day trader, you have to have a set of rules and principles that you follow day in and day out. And no matter how many indicators you use, no matter how complicated it might seem, you have to stick to the fundamentals and the basics in order to stay on top of the market. Myself, I'm a price action trader, so I rely on these candlesticks on the chart and nothing other than this 21-day EMA to read the charts. But no matter what kind of technique you're using, what differentiates successful traders from people who are just gambling in the market is how well you can interpret what is going on and then capitalize on the market psychology and really have an edge when it comes to where you should go long, where you should sell. And let's get into the video. So the first most important thing that I always focus on is the market context. I don't want to overcomplicate things, and the most simple thing is just to always think about where our price is headed and what should I do with that information. So right now, we're about market open on the right side of the chart, and obviously we're in a great uptrend. This video is not going to focus on trend lines, trend channels. It's really just going to focus on how to read the charts and what I'm interpreting at all times. So the markets are designed in a trend like this, especially, to look like it's going to lose steam at any moment. But as long as you keep in the back of your head where prices are likely headed, you're gonna stay on the right side of the market 9 times out of 10. So here, I'm looking at the market context, only thinking about buying. I'm not thinking about selling at all at the moment. Next, no matter what kind of trader you are, you have to have a set of rules and look for certain setups that follow those rules. So for me, I look for two-legged pullbacks. And here we have one pullback, and then we have another pullback at the EMA. And the third rule that I follow, I only take trades with excellent signal bars. So here we have a clear first attempt by the bears to push the market down. That got thwarted. We have a second attempt by the bears to test the EMA. And what happened? We tested the EMA, and we had a very, very good-looking bullish signal bar. I'm going to go long there all day, every day, and it worked out for a scalp. What do we have here? We have another attempt by the bears after we pushed above the EMA to come back, test the EMA, and they got trapped once again. So this is another great trade in my eyes. I'm not overcomplicating things by looking at, oh shoot, like we have a little bit of a resistance area here. I don't want to go long right into it. Yes, it's important to keep that in mind, but there's always going to be certain things that are conflicting when it comes to any setup that you're looking anywhere on the chart. In my eyes, this is a confirmation setup, a confirmation that the bulls are still present. We're still expecting to make higher highs, and the signal bar is good. We're above the EMA. My context, my rules are telling me I'm going to go long here every single day. So once again, before we even think about drawing anything on the chart, let's see what is happening with the naked candlesticks. So we're looking at ES futures, and I really rely on these candlesticks more than anything else. Sometimes I'll draw trend lines, trend channels, but without even doing that, what can we see? We see that we had a steep uptrend that's slowly flattening out, but it's still a very, very healthy trend. It's still about a 45-degree angle. Let's see what happens if we test the EMA once again. But so far, every time we've tested the EMA, we've had a bounce, a bounce, a bounce, a bounce, which means people are still trying to push the market down, but it's failing. So this is why it might look like not a very strong uptrend. These bars are kind of jagged, but in reality, it just means that there's no reason to even start thinking about selling until we have a clear break below the EMA, clear push without much resistance. So once again, I'm taking the market context into account, and I'm just looking for any setup that follows my rules. So here we have a nice, strong bullish bar. It's at the EMA. So the signal bar is great. The market context, great once again. We're pushing up, expecting to make higher highs. But in my eyes, because I look for two-legged pullbacks, this is really just a first pullback. If we have another attempt to go up and we test the EMA once again, then I'll look to go long. So not a bad trade here, depending on, once again, what kind of trader you are. But because two pullbacks are just stronger than one, it just is tied down to market psychology. People who are trading, they're not going to accept failure once. They want to test it again. And the second entries are always more powerful than just the first one. But in any case, it did work out. But you can never be too sure in trading. It's all about what probability you're willing to take and what risks you're willing to take as well. So now, what do we have? We're testing the EMA once again. But in this case, it just looks a little bit sideways. You can't really get too careful, so not a bad entry here. Here we have one leg down, first entry long, another leg down. We didn't get a trigger until... Actually, we did get a trigger, so we have a double bottom here. It does look a little congested, so depending on how aggressive you are, you can take that. But once again, you can't be too picky in it. In a trend like this, when you have a nice bullish bar at the EMA, it's always best just to take those trades, and it's going to work out most of the time. So now we had a little sideways movement, which is expected because even though we had a nice bullish bar at the EMA, it did look a little sideways, which just led to some more sideways movement. So until we really have any convincing break below the EMA, I'm still going to just look for long opportunities. But what do we have here? We have our first convincing break below the EMA. Overall, it just looks very robotic, very concise, which is good if we're looking to go long. So now I want to pause a little bit. I just want to not overcomplicate things, not get too interested in selling, because a lot of people, even though they have a certain trading technique, they're looking for certain patterns, they won't even take a second to breathe and really think what they should be doing. People will try to pick tops right here. They'll say, okay, we have a leg up, we have a break, we have a new high. Oh, look at this excellent bear signal bar. I'm gonna go short here all day, and I'm gonna get a move from here all the way down to this area. Oh my God, that's like a 20-point move. No. Calm down, relax. There's no reason to try to go against the market. You always want to go with the current, with the waves of the market. It's like going against an ocean. If you're trying to pick a top here, you're just going to get trapped over and over and over again until you learn, okay, you know what? Even though it's designed to look like the market could reverse at any moment, the high probability trades is just to go with the market. Unless we have a convincing move below the EMA, and then we have a setup or pattern that allows us to go short. But once again, I'm not even thinking about going short anytime soon. So here we have push below the EMA, a rejection, and now we have a second push below the EMA. So now we are starting to see that the bullish momentum is kind of fading away. We're pushing below, we're going back, testing the EMA. So let's see what happens here. We don't want to force any trades. It's really just sideways movement. So on the left side of the chart where my cursor is, that's about 6:50 Pacific time. And here it's about 7:40. So the past hour or so, we've really just been moving sideways, which does happen even in strong trends. So it's really hard to tell if we're going to keep going up or if we're going to keep going down. But let's see what happens if we test the EMA again. So here's an interesting spot. We have a kind of a confirmation setup, sort of like we had back here. So here we had one leg down, push up, another leg down, test at the EMA. We pushed above the EMA, had a nice bullish signal bar confirming that the bullish momentum is still there. What do we have here? We just have that at a sort of larger context. We have new high here. We have one leg down. We have another leg down. So it's like one attempt by the bears to go down, failed. Another attempt by the bears to go down, push up above the EMA, higher low right here, confirming that we should maybe see tests at the highs once again. We also see some stacked bars at this same area. So according to my rules, great signal bar above the EMA. The pattern or the setup I'm looking for is there. We had two attempts to go down. The failed. We're above the EMA. Market context, markets do not just reverse on a dime. So we had very, very strong momentum up, tried to go down, failed, which is expected. We don't just go straight up, straight down. The fact that we pushed above the EMA, I'm going to take that. I'm willing to take that risk. So once again, I'm not looking at every single indicator possible. I'm not looking at volume. I'm just basing it off the bars on the chart. This is a language that you must learn to read, and no matter what trading technique you use, it comes down to what can you interpret on the chart, how good of a chart reader you are. That's what really separates the traders. You can then add tools to your toolbox, add RSI indicator, you can add different EMAs, you can add bookmap, you can add certain things, but it comes down to the fundamentals. You don't want to go into a basketball game expecting to be a pro and doing behind the back dribbles, through the legs, 360 dunks. You have to start with the basics. You have to start with a triple threat. Come on now. Before you can shoot, you got to learn to pass. Before you can pass, you got to learn to dribble. Before you can do a crossover, you got to learn to dribble straight. So don't overcomplicate things in trading. Look to go long in an uptrend. Look to go short in a downtrend. If prices are looking sideways and we're in a range, when we get to the top of the range, don't look to buy. You want to look to sell. We're getting at a resistance area. When we're at the bottom of a range or bottom of an expected pattern where we might go up, I'm going to look to buy. The markets are designed to trick you, but just go back to the fundamentals. Go back to what makes sense. It's all about common sense and not letting your emotions get the best of you. You have to think like you're a robot in these markets. Only go with what makes sense in terms of the bias of the market, not your own personal bias. It's easier said than done, but it's important to note that. So once again, here we have an interesting spot again. We have a new high here. We have one leg down, push up, another leg down, and then we have a bullish bar at the EMA, second entry long. So you can argue for this trade to go long. I would probably take it, but once again, if we just zoom in on what's been happening here, we're really just in the middle of a swing up, swing down. So there's no clear direction. The bias is definitely up. So you can argue for that trade. You don't want to get too picky like we were saying before. And it worked out. So here we have another higher low, but the bars are very stacked. So I would personally stay away from that. It did work out. But you can't get every single trade. That's another thing. Don't get FOMO. Don't feel like you're missing out on anything, because as soon as you start thinking like that, you're going to force a trade. You're going to not follow your rules. And as soon as you start bending your rules a little bit, no matter what rules you have, you get into trouble. Trading does not have to be something that is very difficult. It can be something that you should be proud of. You should be proud of every single trade that you take. You don't need to get down on yourself. And it's a tough cycle, because when you're following your rules and you're sticking to your rules, you're going to be profitable. There's a million different trading techniques out there. As soon as you start bending the rules, you get down on yourself and you think, okay, let me make my money back. Let me bend the rules a little more. And then you get into a deeper hole. Then you bend the rules a little more and you get into a deeper hole. And then only after many losing trades, then you finally realize, okay, I just need to stick to my rules again. So before you even go through that whole cycle, just try to always stick to your rules no matter what. So here we have another confirmation higher low, similar to what we had here. We had pushes below the EMA. We're not even going to draw trend lines. We have support level here again. We bounced here, we bounced here, we bounced here. What's the common sense telling you? Okay, if we're bouncing there again and we push above the EMA, we have an attempt to go lower, testing the EMA, another strong bullish bar. What's the likelihood of what's going to happen? We're probably going to keep going up. If you wanted to draw a trend line, you might draw something like this and say, oh no, the trend is still intact. But really, I mean, let's analyze what these bars are really telling us. Okay, we're going down, we're going down. Okay, we're going down. It looks decent, but now, okay, bars are getting sideways. We have another attempt to go down. Sideways, 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 sideways. That doesn't look like a strong downtrend. You don't see a trend with this many sideways bars. Let's go back to this. Look how nice and up this trend was. Yeah, here we had some sideways movement, but we never even broke on the other side of the EMA. Here, overall context of the day, we're still in a massive uptrend. We have some sideways movement, push above the EMA, test at it, confirming bulls are in the market. Boom, it would have worked out for a nice scalp. Would have went for even more of a move as well. So stick to your rules, no matter what they are. But at the end of the day, you got to just learn how to read the charts and hone in on your chart reading skills, which really just comes down to how well can you read people and what they're thinking about or what institutions are thinking about. And really the rest of the day just looks kind of sideways, but it's okay. If you stick to your rules in a trend like this, you would have already made your money, which is why towards the end of the day, last hour or so was just sideways. Zoom out, nice strong uptrend of the day. Hope you guys enjoyed watching my video. If you guys want to use Apex Trader funding, they have a nice 90% sale going on right now. You can use my code, link in the description. If you want to use a trade copier with Apex, so you can trade up to 20 different accounts, you can use Replicanto. That's what I use. That's also in the description. 20% off there. Let me know if you guys have any questions, comments. Hope you guys learned something. Hope I provided some knowledge. I learned something about myself. Just speaking this out hones the same things into my head. Good luck to you all. Peace.